In the metals quadrant today, taking a look at the September copper, which was down a little bit more than 1% on the close today, down at about 4.38 and change. On the high, we were only up 21 basis points, so it's a pretty consistently down session. 4.4425 was the high of that September contract. On the low, 4.3385. We didn't get too much off the mat, although we were down 2.13% on those lows. So after reaching the highest level in 2 months, copper falls for a fifth out of 6 sessions. The China crackdown that's going on, the little battle between their tech sector and their government, is part of the reason we're getting pressure in copper specifically and commodities in general. China and Beijing specifically has embarked on a clampdown of its own technology sector. It's sparking growth fears. You're doing things like looking at antitrust probes within their borders, data security concerns, even children's exposure to gaming, which a Chinese state-run publication dubbed spiritual opium, saying online gaming addiction among children is widespread and could negatively impact their growth. This is giving the idea that China is willing to sacrifice gains in their equity markets short term in order to build the kind of society they want and have their industry kind of follow along in that plan. The Hang Seng was down only about 0.2 today, and we saw the China Composite down about another 0.5% today. But overall, that's been weighing globally on what was a better recovery. Also, you have to throw the COVID cases and the Delta variant, which are growing in China as well, hitting the price of copper. Now, we're always looking at the dollar when we're talking about metals, but the dollar was stable today. The dollar was mostly unchanged, slightly stronger against the euro, slightly weaker against the yen, slightly stronger against the pound. But overall, the dollar didn't really have an effect on industrial metals today. It was the overall weight of the commodity sector that gave copper its fifth session down in the last 6.